the notion of income and staying focused on, somebody emailed me, and I'm going to point this out to you because, and if the person is listening, I think they probably are. They're pretty avid listeners. I'm not being critical in any stretch of the imagination. I'm going to use you as a good example. But if people email, this one person emailed me, and it was in reference to 2 utility stocks. And one of the utility stocks, I'm kind of making the numbers up here, but one of the utility stocks was selling for about $45 a share. The other utility stock was selling for about $120 a share. And they said, why would I buy the $120 a share utility? Why do you even have that on the list? And it makes absolutely no sense why I can't put all my money into this $45 a share stock. And I said, you haven't looked at the dividend, have you? So the $125 stock, or whatever it was, is paying about $3.50 a share. The other one's paying about, 40 cents a share. In the long run, you're going to be making far more money, not far more, but a lot more money on the expensive stock than you are the inexpensive stock, because the dividend is so much bigger on the expensive stock, which in this case doesn't always work like this, but in this case, it worked out to be actually more for the money, even though you're going to own less shares. So I say that to say this: when you look at a stock, like let's say 2 utilities, I can think of 2 on my list. When you look at those, don't just look at the stock and say, oh, I'm not spending $124 a share. Look at it and say, what's the dividend? Okay, not the percentage. Forget the percentage. That's what I'm talking about. It's going to list on there on my chart. If you click on the stock, it'll list. It says annual yield. That's a percentage. No, just look at the dividend. So the dividend, look at it, and it says it's going to break it down. Sometimes it breaks it down quarterly and annually. If it's quarterly, you got to times it by 4. If it annual, so look at the annual dividend, and the annual dividend might be $3 a year on a share, or let's say $4 a year. So it's $1 a quarter. The other one may be $2 a share, 50 cents a quarter. But you're not getting, it's not a double 2-for-1 share. And it may end up that the more expensive one is going to get you enough shares to be a little bit more money than the less expensive one. So do the math a little bit. It's not that hard to figure out. You can see it very clear when you click on the charts. I would encourage all of you to do some of that independent stuff, because it helps give you a much greater understanding of what you have and why you have it. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.